Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Brothers and sisters, let me welcome you to the uh, lecture that I'm going to present. The title is Sukuk Market and its Recent Developments. What I intend to do in this presentation is first to look at the evolution of Sukuk market. That is to look at the historical background of the Sukuk market from the early 90s up to today. And secondly, to identify what are the key observations from the Sukuk issuance market. We have seen through from the 90s to the 2000 up to 2015, we can identify some of the key observations. So I will identify some of the key observations from the Sukuk market. And the third thing that I'm going to discuss is some of the recent innovations that we see in the Sukuk market. Innovations such as Perpetual Sukuk, the socially responsible investment Sukuk, hybrid Sukuk. These are the Sukuk that are coming up recently in the market in order to meet specific needs. So we'll be looking at some case studies, specific case studies, as an example for us to appreciate the kind of innovations that are happening in the Sukuk market. Finally, we will conclude by looking at some of the issues that are related to structuring of Sukuk, and that will end our presentation for the day. Let me begin by looking at the historical development of Sukuk. The debut of Sukuk, we can say that it began in 1990 with the issuance of 125 million Malaysian ringgit, or equivalent at that time to US dollar $30 million. Sukuk issued by Shell MDS Malaysia. This is a Shell petroleum company based in Malaysia, and they use albait vitamin Najil, which is similar to Sukuk al-Murabah. And in between 1990 to 2000, there were some developments in Sukuk market, but not significant development. Only we see in September 2001, where the state of Bahrain issued the world's first sovereign Sukuk for $250 million. And this Sukuk is again unique because this is the first Sukuk Ijara, and it carries a fixed rental payment for 5 years. Unfortunately, this Sukuk was not listed in any exchange, nor was it rated internationally. And then in December 2001, Guthrie Group or Kumpulan Guthrie, a Malaysian plantation company, a government-linked company, issued $150 million Sukuk Ijara. This time, which is slightly different from state of Bahrain, that is, they issue a floating rate Sukuk. So as we can see from here, we see there is improvement from a fixed rate Sukuk Ijara. We now have a floating rate return. So the frontiers, Sukuk frontiers, are now being pushed forward, and innovations are being introduced in the Sukuk issuance. Okay, and then in 2002, another interesting development happened. Just a few months after the issuance of Sukuk Ijara by Guthrie Group, is the government of Malaysia. So the government of Malaysia issued a 600 million Sukuk al-Ijara again. And this time, it was listed in Luxembourg Stock Exchange and rated by an international organization, Standard & Poor's and Moody. So this is the first time ever where we have a global Sukuk, listed global Sukuk, as well as being rated by an international or by international rating agencies, 2 international rating agencies. On top of that, we can say that this Sukuk is a landmark Sukuk. Why? Because in the first place, it is the first global Sukuk that complied with the US Regulation S and Rule 14144A and meets the conventional bond practices such as listing requirements, ratings, dematerialized scripts, and centralized clearance. So this is, I would say, the beginning of the global Sukuk market, where it has now reached parity with conventional bond practices. So it also indicates that Sukuk will now be able to move forward and to meet some of the key requirements of the conventional bond. And as a result, it will be able to meet up the demand of investors. One, funds that are Sharia compliant funds, and secondly, the funds at Islamic banks as well as takaful companies. Then what I'm going to do is I'm going to show you some of the statistics about the global Sukuk trend from 2008 until third quarter of 2014. As you can see, when Malaysia started the sovereign Sukuk, this was followed by the state of Qatar and subsequently a number of sovereigns issue Sukuk. So the figures that I've shown you here shows the Sukuk issuance by sovereign, by corporate, by quasi-sovereign, as well as the one in blue refers to the number of Sukuk issuance. As you can see, Sukuk is one of the fastest growing segment of Islamic finance. Islamic banking, of course, has much longer history. It started in 1975. Sukuk started in 1990, but practically the actual growth of Sukuk started from 2000 onwards. So as you can see, from 2000, and then we have the statistics here from 2008, we see that total amount of Sukuk being issued was only 20 billion US dollars in 2008. And the bulk of the Sukuk issuance came from sovereign, and to a certain extent, quasi-sovereign. And then moving forward, we see from 2008 to 2010, there was a big jump from 20 million to more than 40 million. So it's like 100% increase in the Sukuk issuance. This is close to about almost 60 million. And then we see in 2012, where Sukuk reached 140 billion US dollars. And then in 2013, it goes down to about 120 billion. And at the end of 2014, although the statistics here showed third quarter, but I have another statistics which showed that the global Sukuk stood at about 119 billion US dollars at the end of 2014. Looking at the number of Sukuk issuance, as you can see, the number keep on increasing as well. And so the number has increased over the years. The issuance by sovereign has increased. Particularly, we see that in 2013, the total sovereign issuance was $32 billion. And if you add with quasi-sovereign, then you're talking about slightly more than 40 billion US dollars. And the statistics here shown for 2014, which is up to third quarter of 2014, already sovereign Sukuk issuance stood at 22.6 billion US dollars. But bear in mind, if you compare with banks, banks' assets are much more than Sukuk. Okay, then we look at the sectors that issue Sukuk, particularly from the corporate Sukuk issuer side. Which sectors or which corporate are issuing Sukuk, and which sectors they come from? So if you look, the bulk of the Sukuk issuers come from the financial services, which means Islamic banks and related financial institutions. To 2013, and the red one is in the third quarter of 2014, we see it comprises of 13.9 billion US dollars and 18.2 billion US dollars in the third quarter of 2014. This is followed by power and utilities company, transport in 2013, but there's a significant drop in the case of third quarter of 2014 for transport. We can also see construction sector tend to be stable, whereas real estate has increased somewhat. And we also see telecommunication significant amount 3.6 billion in 2013, but subsequently 1 billion only in the third quarter of 2014. So this gives you a flavor in terms of some of the statistics that are seen in the context of sovereign as well as corporate Sukuk issuers. Moving on, what I've done here is I've shown a chart that shows the comparison between international Sukuk issuance from 2001 to 2008, and then from 2009 to 2012, followed by January 2013 to July 2014. So what we can see is the issuance of Sukuk by structure. So we have Sukuk al-Wakalah, Sukuk al-Salam, Sukuk al-Musyarakah, Sukuk al-Murabahah, Sukuk al-Mudarabah, Sukuk al-Ijarah, Islamic exchangeable Sukuk, as well as hybrid Sukuk. So we can see the development. I will not go into detail at this stage. I will have a separate table later on to contrast the percentage of Sukuk issuance for 2001 to 2008 compared with 2009 to 2012 and 2013 to 2014. Okay, and then what we can see from this international Sukuk issuance, I've shown you here only the percentage of issuance, but if you look at the table, you look at the pie chart, you can see that what I've shown using a mouse, on the left side, these are the dollar value, $325 million of Sukuk being issued at that time, followed by $1.958 billion. And in bracket, these are the percentages. So what we can see in the context of international Sukuk issuance, Sukuk al-Wakalah started from 2001 to 2008 with only 1%. And then, and I will discuss a bit about this IOFI pronouncement, you can see from 2009 to 2012, there is a big jump in the issuance of Sukuk al-Wakalah. It goes up to 27%, and from January 2013 to July 2014, it increased even further to 34%. So as you can see, there is a strong preference for Sukuk al-Wakalah from 2009 onwards. Moving on, if we look at Sukuk al-Musyarakah, from 2001 to 2008, it comprises of 20% of the issuance. But subsequently, 2009 onwards, it dropped tremendously from 23% to 6%, and finally to 1%. So there's a big drop. And again, part of the reason can be explained from the IOFI Sukuk pronouncements in early 2008. And then we look at Sukuk al-Murabahah has increased from 1% to 5% and subsequently to 13%. So we have Sukuk al-Wakalah, Sukuk Murabahah. These are the two popular Sukuk. Sukuk al-Mudarabah, a very small percentage, started 13% from 2001 to 2008, dropped significantly to almost 0% in 2009 to 2012, and increased slightly to 4%. And there are reasons, and we will explain this later. You also see Sukuk al-Ijarah from 39% goes up to 48% and remain above 40% from January 2013 to July 2014. So now we can see Sukuk that are popular based on different time period. You will see Sukuk Wakalah becoming more and more popular, Sukuk Ijarah, as well as Sukuk Murabahah. And each of these Sukuk, they have their own strengths and weaknesses. For example, in the context of Sukuk Murabahah, there will be the issue of secondary trading in the secondary market. where you can buy Sukuk at the primary market, but you will not be able to trade in the secondary market because of the issue of trading of receivables. Sukuk Awakala can be traded depending on the kind of assets, the underlying assets that they have. Sukuk Arijara, of course, because it's based on lease assets, they are easily tradable in the secondary market. And as we can see also, Sukuk Ijara is more flexible in the sense that because it allows for a fixed rate of return or a floating rate of return. Okay, for now we go to domestic Sukuk. For domestic Sukuk issuance, again I showed here in the pie chart from 2001 to 2008. This is for the purpose of comparison between international Sukuk issuance versus the domestic Sukuk issuance. And then we have from 2009 to 2012, and finally January 2013 to July 2014. Again, using those pie charts information, we transfer them into a table, and based on a similar percentage basis of Sukuk issuance, we see a number of interesting developments. At the domestic level, Sukuk Wakalah seems to be stable in the sense that it comprises only 1%, as opposed to, if you look earlier, 34% or 27% at the international Sukuk level. There must be an explanation for this. So in a sense, because of the international level, you want international investors. So the importance of having Sukuk that is well accepted across the globe. On the other hand, the demand or the demand by issuer for Sukuk Wakalah seems not to be that significant. And percentage-wise, also amount-wise, also, if you look at Sukuk Wakalah for domestic issuance, the amount, as we can see from here, is 1.96 billion, which is almost the same as Sukuk As-Salam, which is 1.9 billion as well. And Sukuk Wakalah is even smaller than Sukuk Mudharabah, which stands at 7.3 billion US dollars. And contrast also with Sukuk Ijara, which is 46.5 billion dollars, and Sukuk Masyarakah 32.2 billion US dollars for 2009 to 2012. So coming back to the figures here, we can see that Wakalah seems to be the same, but the Sukuk, the type of Sukuk that were issued for domestic market, a big significant percentage comes from Sukuk Murabaha, where, as you can see, Sukuk Murabaha started at 25% from 2001 to 2008, and it goes up to 58% from 2009 to 2012, and went up even further to 65% from January 2013 to July 2014. Although we see the demand for Sukuk Murabaha is significant, yet the same issue that I mentioned earlier on, there is the issue of trading in the secondary market, which also means that investors in the domestic market will buy Sukuk Murabaha and keep it until maturity. There is no secondary trading. Even if there is any secondary trading, the price of Sukuk must be at par. Similarly, we see significant drop of Sukuk Al-Mudharabah from 17% in 2001 to 2008 to 3% to almost 0% in January 2013 to July 2014. And Sukuk Al-Ijara tend to be stable from 20%, 17% in 2009 to 2012, and sorry, this is a mistake. This is 4%. Mudharabah, sorry, 14%. Sorry, 14%. So Sukuk Al-Ijara dropped from 17% to 14%, but again, not a significant drop. And then hybrid Sukuk about 9%, and Al-Bait Vitamin Ajil 2%. So if you combine Sukuk Murabaha and Bait Vitamin Ajil, Sukuk, which is issued in Malaysia, you're talking about 67% of the Sukuk are based on Murabahah or similar to Murabahah structure. So it's a very significant percentage indeed for domestic Sukuk issuance. And it also tells us that domestic investors as well as issuers tend to prefer Sukuk Murabahah, and it also indicates that those investors will keep those Sukuk until maturity. Moving forward, what are the key observations that we can see from the 2000 to 2014? A number of interesting observations that we have seen. One, if you go back to the definition of Sukuk, the earlier definition of Sukuk talks about certificate of ownership of underlying assets. Therefore, at the early beginning, the thinking was Sukuk must be fully backed by assets. That's one. And secondly, those assets must be owned by investors. So true enough, we see that the thinking then was Sukuk must be covered or must be backed by 100% of the physical assets, which means that if an issuer wants to issue 100 million US dollar Sukuk, then they must have physical assets of 100 million US dollars. In addition, those assets must be sold to the investors or to the Sukuk holders through the SPV. This was the original thinking. However, in reality, the problem that issuers face is to find suitable assets of sufficient value or assets which are unencumbered assets. Alternatively, the issue of tax, the issue of legal restriction of sale of assets to foreign investors, the issue of 100% physical assets requirement to meet the amount of Sukuk issuance, and the true sale of underlying assets could not be materialized given those problems. So what we have seen from 2002, where the government of Malaysia, as well as before that the state of Bahrain, were able to provide 100% physical assets for issuance of Sukuk al-Ijarah. Subsequently, we find as more and more corporates issue Sukuk, they have problems of finding suitable and sufficient tangible assets to cover the issuance of Sukuk. As a result, there rise another interesting development, what we call the birth or the rise of asset-based Sukuk. So what do we mean by asset-based Sukuk? Asset-based Sukuk refers to the sale of beneficial ownership of underlying assets to Sukuk holders. It does not require a true sale, but a sale of beneficial interest or beneficial ownership. So therefore, the first example, as you can see, the first example of asset-based Sukuk was the 2002 US dollar 600 million government of Malaysia Sukuk al-Ijarah. That was the first one where it uses the concept of SPV and the concept of beneficial interest on the underlying assets sold to the SPV on behalf of the Sukuk holders. And the Sukuk used in this particular case of Malaysian government were government buildings, hospitals, and civil service accommodation. But one interesting aspect of this Sukuk is that in the event of default or dissolution, the Sukuk trustee does not have the power or the right to retain or sell the assets to any third party, but rather to the government of Malaysia. So in a sense that if you look at the context of Ijarah, when the lessor leases the assets to a lessee, if the lessee defaults in this particular case, the Sukuk structure ensures that the lessor does not sell the asset to a third party, but instead sells it to the lessee. So this is the asset-based Sukuk. we now come to the next stage of Sukuk development. That is what we call, in bracket, blended assets Sukuk. What we can see is that as more and more companies, corporates, and government issue Sukuk, they face the problems of having sufficient physical assets to cover those Sukuk issues. Hence, Sharia scholars, together with investment bankers, came up with an alternative. And the alternative is to use a concept of blended assets, whereby the underlying Sukuk assets now comprise of both physical assets as well as Sharia compatible receivables. Prior to this, what we call the asset-based Sukuk, it requires 100% physical tangible assets. Now, as more Sukuk issuance are being put, the issuers face problems of identifying and having enough or sufficient assets. So Sharia scholars allowed a blended asset approach with a combination of physical and Sharia compatible receivables. Initially, the requirement was to have at least 51%, or some scholars, at least 66% of the portfolio must comprise of physical assets, which means, for example, if it is 51%, which means that tangible assets or physical assets must comprise at least 51%, and 49% can be Sharia compatible receivables. To some scholars, they require 66% of physical assets versus 34% of Sharia compatible receivables. Again, corporates as well as sovereign face difficulties of having enough or sufficient physical assets to cover the Sukuk issuance. And in 2005, Sharia scholars, some Sharia scholars and Sharia board approved that the minimum physical assets required to issue Sukuk is being reduced from 51% to 30%. So this is also another interesting development. From 100%, it goes down to 66 or 51%, and later on it goes down to 30% physical assets, and the rest represents Sharia compatible receivables. Subsequently, we also see another interesting development. That is the issuance of asset-light Sukuk. What do we mean by asset-light Sukuk? So we started with asset-backed, and then we have asset-based, and then we call it blended asset Sukuk, and finally, in bracket, we call it asset-light Sukuk. Again, as more and more corporates, more governments, more sovereigns, more quasi-sovereigns try to tap the Sukuk market, some of them were not able to meet the 30% physical asset requirement or have sufficient Sharia compatible receivables. So what happened in the market then was some Sharia scholars again work with investment bankers to come up with two new structures, what we call Sukuk Mudarabah and Sukuk Musyarakah. These two Sukuk do not require any physical assets at the time of Sukuk issuance. In a sense, this allows issuers to issue Sukuk on a basis of projects that they want to embark upon. However, the key features of those Sukuk were criticized by IOFI, Sharia Board, in their 2007 event, and subsequently in 2008, IOFI pronounced effectively that asset-like Sukuk, Mudarabah Musyarakah, and of course some other related Sukuk, Al-Ijarah, had to be revised. Particularly in the context of Sukuk Musyarakah and Sukuk Mudarabah, the structure then was effectively, although it is what we call risk-sharing Sukuk, where investors share the risk. In this particular structure before, it is like almost a guarantee that the investors will get their principal as well as return from the Sukuk investment. So when the IOFI made the announcement in early 2008, it more or less put an end to the growth of sukuk mudharabah as well as sukuk masyarakat. So post 2008, after IOV announcement, we now see another development. What is that development? Issuers now go back to the blended asset sukuk, or what we call quote-unquote blended asset sukuks, which means that now sukuk ijarah and sukuk marabah remain popular choice, but the issuance of sufficient physical assets in ijarah and tradability in the secondary market will hinder the acceptance. Hence, a new type of sukuk called sukuk wakalah was promoted as a solution to the issue of insufficient assets as well as tradability in the secondary market. And one of the significant issuance of sukuk wakalah, although there were sukuk wakalah before that, but one of the most significant sukuk wakalah was the 2011 $2 billion dual tranche sukuk issued by the government of Malaysia. Here, again, as we said, this is the blended sukuk, where the assets comprise of lease assets and Sharia compliant shares. Previously, it was lease assets and receivables, but now we have lease assets as well as Sharia compliant shares, totaling 52%, and murabah receivables totaling 48% from Sharia compliant commodities. So we now have another interesting development where lease assets, tangible assets with intangible assets, i.e. shares, which comprise of 52%, and then on top of that we have murabah receivables from the commodities trading, comprising of 48%. So these two together, 52 and 48%, meets the Sharia requirement for the issuance of sukuk. Because it was on the basis of wakalah, the obligor in this case is appointed as agent to invest and manage the sukuk proceeds on behalf of the sukuk holders. So this sukuk relies on blended asset structure, which is based on the principle of khulta. There is a mixture of assets whereby more than 51% must be physical or tangible assets. And this structure has the added advantage of allowing issuance above the value of available physical assets. Say, for example, when a corporate wants to issue a 100 million sukuk, and if they have assets of only, say, for example, 55 million US dollars, then the remaining 45 million can be from the receivables. Okay, so this is another interesting development of the sukuk market, and this is an example of the government of Malaysia $2 billion dual tranche sukuk in 2011. Just briefly, as you can see from this diagram, in the first instance at point number 1 here, SPV will issue sukuk to sukuk investors, and sukuk investors will pay sukuk proceeds to the SPV. SPV will then use that money to purchase asset from the government of Malaysia, and government of Malaysia will receive the sale price, which comprises of 52% of the physical assets as well as the shares. And those assets are, after the sale of assets, the government will then release back the assets from the SPV, and SPV will subsequently appoint the government of Malaysia as the wakil in this particular case. So hence the term called sukuk al-wakalah. At the same time, for the murabah receivable component, which comprises of 48%, the SPV will purchase commodity through a wakil, which means the government of Malaysia, will purchase commodities from trader A, and subsequently will sell to the government of Malaysia on a deferred payment basis. At 49%, and the government of Malaysia, once it receives the commodity, it will then on-sell to another trader. So this is the tawarruk structure component, where it will on-sell to trader B at spot and will receive cash from that. Okay, so this is the structure at inception, and upon maturity, we can see from starting at number 8, Within the ongoing period, the government of Malaysia, as a wakil of the SPV, will continue to manage the asset pool, and the government of Malaysia, as a lessee, will pay regularly to the SPV for the lease of the assets. And upon maturity, the SPV will sell back the asset to the government of Malaysia, and government of Malaysia will pay exercise price of 51%. So in between, there will be periodic distribution of lease rental to the Sukuk holders. And similarly, the last point, number 12, the government of Malaysia will also pay to the SPV for the purchase of deferred commodity, which amounts to 49%. Okay, and that's one example of what we can see, the Wakalah Sukuk. Another example is the Perpetual Sukuk. So we can see from Wakalah Sukuk, then we have another interesting development is the Perpetual Sukuk, and this became popular especially post-2012. It started with Abu Dhabi Islamic Bank issued a Sukuk Mudarabah to the amount of $1 billion US, and this Sukuk has a maturity of 6 years, and has a maturity of 6 years, and it is based on a fixed rate, and at the same time, this Sukuk is a perpetual Sukuk, which means that there is no fixed maturity, and it meets the requirement of Tier 1 capital ratio. So this is also another unique example. Previously, we see Sukuk Mudarabah having a limited duration or maturity. So in this particular case, we have a Sukuk Mudarabah which is perpetuity in nature. So we started with asset back, we now have asset base, blended asset, and then we go to asset light. Now we go back to a blended asset Sukuk, and then we have perpetual Sukuk. So perpetual Sukuk is again another innovative development. And an example of Mudarabah, Sukuk Mudarabah for perpetual Sukuk can be seen from this diagram, but suffice to say it is similar to the earlier, to the Mudarabah Sukuk. If some of you are familiar with, it's similar structure, and the only difference that this is a perpetuity Sukuk and with some minor modification. Okay, then let me just go to a few interesting development. Apart from we see Sukuk Wakalah and then perpetual Sukuk, we also see the role of Islamic finance is in sustainable, or what we call it, socially responsible investment, the SRIs. If you look in the context of Islamic finance and SRIs, they are very much in common. For example, Islamic finance, we cannot invest in certain sectors or certain industries because it is against Sharia. As an example, Sukuk cannot be issued to finance the production or the construction of factory to produce tobacco, as an example. Similarly, in the context of SRI, they will not go into financing tobaccos or financing gaming or gambling institutions or hotels that are going to be used for gambling or casino. So really, you see that SRI and Islamic finance are very much compatible to each other. So it is without much saying to say that it is a matter of times where we see SRI and Islamic finance converge and provide alternatives or options to investors. Hence, in 2014, the International Finance Facility for Immunization issued the first Sukuk, about $500 million US. And interestingly, this Sukuk is for the purpose of immunization. It is not for the purpose of so-called commercial in nature, but it is for the purpose of children's immunization in the world's poorest countries. And they do it through Gavi, the Vaccine Alliance. So this landmark transaction is the first socially responsible sukuk where the funds are utilized for this particular purpose. And this successful transaction also marks the largest sukuk al-murabah issuance in the public market, and it's also the first inaugural sukuk offering from a supranational. This is a 3-year sukuk, and it complies with the Sharia laws or Islamic law, and it is dedicated to help tens of millions of children against preventable diseases. So this is the first time ever we see sukuk is used for SRIs as opposed to for commercial sector. Then in June of this year, 2015, Khazanah, the Malaysian government's investment arm, announced the issuance of sukuk, the first ethical sukuk called Sukuk Ihsan. And the amount is $1 billion program, and they will be issuing a series of sukuk, and each series will comprise of about $150 million. So Ihsan is a trust-owned company, an SPV, which is established for the sole purpose of raising capital to support the corporate and social responsibility efforts of Khazanah, the promoter of this exercise. And unlike the earlier sukuk, which was issued by the International Finance Immunization, this sukuk is based on Wakalah al-Istismar, the investment sukuk, investment agency sukuk, and the proceeds for this sukuk will be used to fund eligible SRI investments as defined by the Malaysian Securities Commission. And what are these? They will fund the education, they will raise money, or they will fund affordable housing, healthcare and environment sectors. They will fund projects, energy conservation projects, renewable energy such as wind, solar, build public schools, hospitals, affordable housing, and develop awqaf properties. So this is again sukuk that is used to finance SRIs. And also interesting feature of this sukuk is that as investors who purchase this sukuk are not technically driven by profit per se, this sukuk will follow a unique step-down structure. Coupon payments will be reduced by 80 to 100 basis points from their fixed rate if the projects concerned, for example, schools, meet certain KPIs as set by Khazanah itself. So again, this is another interesting development. As we can see, sukuk started from, let me recap, sukuk started from asset-backed, goes to asset-based, goes to blended assets, goes to asset-like sukuk, and then blended asset sukuk, and then now followed by perpetual sukuk, SRI sukuk. So these are some of the interesting development that we can see in the sukuk market. Finally, let me conclude by looking at some of the key considerations in structuring a sukuk. Because at the end of the day, no matter what type of sukuk that we issue, what structure that we use for the sukuk, one of the most important things is to identify Sharia compliant assets. The Sharia compliant assets, again, as I mentioned, it could be 100%, or subsequently for Sharia scholars or Sharia board, it can go as low as 30% tangible assets with other assets, shares, receivables, and so on, that will come up with the remaining 70%. So it's important to identify, for issuers to identify and carve out the Sharia compliant assets, which meets their own respective Sharia board requirements. In addition, those assets must be unencumbered. Many institutions face this problem because some of these assets are already being pledged with banks and other institutions, and it's difficult to identify and to have assets that are not unencumbered. Hence, as I mentioned earlier on, the challenge is to have sufficient assets to issue Sukuk. The third thing under asset identification is the issue of having assets whose valuation is equal or greater than issuance amount. For example, if Sukuk is 1 billion US dollars, obviously assets, both tangible and intangible assets, which means that physical assets plus receivables plus shares must be equal to 1 billion US dollars or above 1 billion US dollars. Hence, this may be a limitation to a number of corporates or sovereign or quasi-sovereign in issuing Sukuk because of the lacking of assets to issue Sukuk. And of course, SPV is very important, whether it's going to be offshore, onshore, whether SPV is going to be a sole ownership or it's a joint ownership between the issuer and the originator. Tax would be another issue that will have to be considered in issuance of Sukuk, capital gains tax, sales tax, withholding tax. These are issues to be looked at. And then finally, the legal framework, whether using civil or common law, using the concept of trust. In countries that have common law, it's very easy to have this SPV on the basis of trust. And finally, we have the recognition of beneficial ownership. I think these are issues that must be addressed before a Sukuk is being structured by investment bank together with the Sharia advisor. I think I close at that. I will now open for question and answer. Okay. Explain orally or in writing?
Yeah, no, orally.
In oral. Okay. Maybe I think the first question that I saw just now was about the presentation materials. I think this will be made available immediately after the session. Secondly, is a question about what kind of credit enhancement for Sukuk issuance, bearing in mind Sharia compliant aspects. Okay, fine. I see a couple of questions. It's a little dark. Oh, you mean the screen? Yeah.
So maybe this is a question.
Okay. So the question asked is about what kind of credit enhancement for Sukuk issuance, bearing in mind Sharia compliant aspects. And generally, Sukuk can have credit enhancement. A good example of credit enhancement is what we call over-collateralized, which means that if you want to issue 100 million Sukuk, one way would be to have an asset or to have assets which is much more than 100 million. As an example, the asset could be worth 120 million and Sukuk issuance is $100 million. This is one example of credit enhancement. And of course, on top of that, you would have a guarantee by a third party. This is also available for Sukuk investors. So these are kind of credit enhancement for Sukuk issuance. And we have seen this in many cases where a third party guarantee or over collateralized are used in previous Sukuk issuance, be it at the corporate sector or, for example, sovereign Sukuk, where the government guarantees the Sukuk indirectly through purchasing the Sukuk at the end of the period. Okay, anything else?
Okay.
There's many, but I cannot see. Too small.
Yeah.